Time now for business news, and we can check in on the markets out in Asia. The last day of the trading week, and all week long, we've been seeing investors responding to the pandemic and how governments have been responding to the crisis. The Nikkei in Tokyo down 0.2%. The Mumbai up, though, 0.4%, and the Sydney down 0.6%. Meanwhile, China, Hong Kong, and Korea all have their markets closed for the Chinese New Year. Well, earlier, we spoke to Jamil Ahmed, Director of Investment Strategy at NAGA, to find out how the markets were moving.
It's actually been a quieter trading week in general in terms of volumes and also in terms of volatility. We still have markets overall that are pointing reasonably close to all-time highs, but there was some concerning comments from Federal Reserve, which is the U.S. Central Bank, the Chair Jerome Powell earlier this week, where he made a pretty explicit statement that the real unemployment rates in the United States right now are somewhere close to 10%, which would be its highest level since the Great Recession of the global financial crisis 12, 13 years ago. And it goes to show how much that these stimulus packages and government support is actually helping people keep hold of jobs despite what is being a very modest jobs recovery. And that's been pretty much a global picture as well, because we're seeing in the UK, we have jobs retention schemes. There's similar schemes around Europe as well. Generally, other than that, we do think that market volatility will remain a little bit quieter over the coming days as well, because of course the Chinese New Year holidays are kicking off today and through last night. And we do think that we'll see lower trading volumes perhaps for the next couple of trading sessions at least.
Well, Germany's bars and restaurants are still closed and its stadiums are empty. For the country's most famous export, beer, that spells catastrophe. Sales have dropped across the sector, with average losses in breweries of 23%, sometimes hitting 80% in smaller ones. Compared to 2019, the drop amounts to 500 million liters, or enough to fill 200 Olympic-sized swimming pools. Nick Spicer reports.
In Germany, it's not just a drink, it's an entire culture. Like many brewers, Oliver Lemke sells most of his beer in his own restaurants in Berlin, now all closed because of COVID.
Before Corona, we produced 6,000 hectoliters of beer a year, but now we're making barely 3,000, which is a significant drop.
In normal times, this brewer employed 12 people in production, another 100 in the pubs. They're all on part-time work now. As in most of the 1,500 breweries in Germany, most of the beer ships out in kegs.
80% of our production is for restaurants, but with the pandemic, the market has simply disappeared.
Oliver Lemke has started selling online to try to claw back some of his business. With restaurants, bars, and football stadiums all closed, beer consumption dropped by 5.5% in 2020, or a whopping 500 million liters. A collapse unheard of since the end of World War II. But Germans still love to suck back the suds, says this specialist. Consumption in bottles is still solid.
People drink a bit more beer at home because of the lockdown, because there's not a lot to do. But they're drinking more conscientiously, so they go on the internet to find new products.
A small consolation for brewers, the Industry Federation warns of a wave of bankruptcies.
We see more and more small breweries in states of complete distress. We think that dozens of family companies are right on the edge of shutting up shop.
Restaurants aren't reopening anytime soon, so brewers want financial help from the government. A way, they say, of protecting a cherished national tradition some 500 years old.